Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Monday, December 14th. Also, greetings from Fort Lauderdale, Florida. Well, let's see how things finished up here on Friday. Well, we did make some new highs. The NASDAQ really did struggle. Where we found sellers before, we did see them back off again. So this is a market making new highs on selling. Not really a confident way to go into the weekend. Not the kind of behavior you want to see. What we saw in the E-mini S&P 500 or the Dow or the mid caps, those were all pretty healthy. But the NASDAQ, on the other hand, just is kind of struggling up here. So for Monday's action, we'd be a little suspect here, but I think the real issue is, can we get a close above the 1820, right? Which is what you and I have been talking about. That if we're going to see continuity, if we're going to get out of this sideways range, that's what we need to see happening. And ideally, in the ideal world, we'd want to see that, well, happening on Friday, which it did not happen, but happening by Tuesday of this week. The reason for that is you want time for that trade to work and to stay healthy. So it's going to be critical to see if we can get up towards that range and how we get up towards that range. The one thing I do want to mention to you, you see two green lines here, and in the advanced video we talked about this is a buy point, but the idea, because of this structure we had here, that this green line here would be another buy point. In other words, that position could be added to. And this reached magnitude objective on Friday, so it's got the right kind of behavior in place. But the issues here, even for these guys, is to get some follow through, and we want to see it early in the week, not late in the week ideally. Now, let's move on and let's take a look at those currencies. The euro got weaker. You know, I said what I was looking for was a push to the upside. For this to get a little bit stronger, it has not. You know, I thought the dollar would get weaker today because of the way it behaved this week. Not so. The dollar remained strong. These currencies remained weak. We see it in the Swissy. You know, even our friend Mr. Yen came off a little bit. The Aussie dollar came right back. This is an equal and opposite. It is bearish. We're looking for a down move. Same thing for British pounds. Kind of just struggled here in that respect, but the sellers are still in place. And the Canadian dollar also backed off as fast as it went up. So it does imply weakness. It does imply that, you know, if you and I had these short positions on, for example, we'd want to stay with those positions. We are looking for unchanged to lower in today's session. British pound right now is setting itself up to be the most resilient out of these currencies. And who knows, maybe it's going to lead the way here. But right now we're looking for continued weakness in these currencies, strengthening in the dollar. And when we look at the short end of the curve, interest rates, it's starting to come off a bit. They're still finding sellers here, but it's kind of bouncy down here, right? We're finding buyers on the brakes. That's what this implies to us. In the notes, sellers are now coming into that market. Critical level, though. So I think we need to be cautious here. Bonds also came off, but this is not so bearish. You know, I think for both of these, on the short side of that market, we'd want to be cautious. This is bullish. The issue is, can these buyers give us follow through in today's action? That's one issue. The second issue is when we have containment shadows, these two shadows here, that's what I call it. It's kind of a Dan thing. It potentially implies sideways market. So we may be going into that kind of a phase. In the first couple days this week, we'll get a little more information on that, but it does imply sideways market potential. And if we look at those metals, well, gold, we're expecting continuation to the downside. I want to show you something here, though. 43 was that buy point. It went to 43.40, so that means it ticked through that price level. And from that sell point down to that price level, that difference is $60 or $6,000 a contract. And what we'd be looking for is continuation lower. However, today in gold specifically, we are not looking for a big move down. Unless something comes out that fundamentally can cause that, we are not looking for another big move. We're looking for a relatively small move in today's action. Silver silver's gotten low enough to find buyers too. I have to tell you, I think that we have to be very cautious here too. We have to respect that kind of action. It implies the potential for a push to the upside, I think, today. Copper is supposed to be benefiting from the growth in China's economy. Things are looking pretty good, and the expected demand for copper now is expected to grow to feed that economic growth in China. So if that's true, then we need to see some follow through. This also, from that sell point down to this buy point in copper, that difference there would be 6 cents or $1,500 a contract. That's the dollar value of that move. And it's important to get up and get going in today's action for copper. We are looking for follow through. In the energy market, continued weakness in crude, and we're also seeing this market back off here in natural gas. Well, let's talk about natural gas and crude. What I refer to in these are the mini contracts. So when I look at a magnitude objective, or if we move $1, if you move $1 in the big contract in crude oil, you're talking about $1,000. In the mini contract, that difference is $400. In the natural gas market, if you move 10 cents in the natural gas market in the mini, that's $250. If you move 10 cents in the full contract, that would be $1,000. So what we're looking at, either mini or the large, I usually refer to the minis in the advanced videos. That's why those reference numbers that you see coming out refer to that. Well, natural gas, we're looking for it to back off. A very weak close here on Friday. We're looking for those sellers to possibly continue in today's action. And finally, the grains. These rallies that we're seeing here is also going back to China. That it appears that they're in there, the expectation is that they'll come in and start buying some beans, the world's largest consumer of beans, soybeans, and also some corn. And what we're looking at there is this market pop back up here. That was the sell point. Here's the buy point. Each penny here is $50. So that move back up here would be $450. That's the dollar value of that move. Here we had a sell point there at that point, a buy point down here. This market also went through that, would initiate a long position, and would close out a short position. That would be the concept, and that would be $550 is the dollar value per contract in that for a profit. Wheat, trying to figure out what to do. And we're expecting more of that. If corn and soybeans do start to move, maybe it will drag wheat along a little bit. But right now we're looking for this uncertainty to continue. Well, this concludes today's market studies. Hope you had a great weekend. Looking forward to being with you again tomorrow. And in the meantime, take care.